Hey guys, Brian Stevens here with Mortgage Shots in the National Real Estate Post, also as a loan officer with the Loan Factory. We have our own team inside of the Loan Factory called CB Mortgages, and you should really see what we're doing. We are doing things that are fundamentally different, really different. If you want to be a part of it, just go ahead and give me a call, send me a text message. That's probably the best way, or go ahead and put it in the comments down below, or you can reach out to me on Facebook with instant message. Okay, so we have a lot of things to talk about today, and none of them are good ideas, and we're going to show you precedents as to why these are bad ideas. The first one is it looks like we're about to start the Great American Giveaway once again. That's where the federal government is just going to peel off money and give it to you for doing absolutely nothing. You know what we say about a free lunch? They don't exist, and just because the government's giving you money doesn't mean you're going to have to pay for it. Think of where we were the last time we saw the government give out a ton of money and introduce 25% more US dollars into our circulation, devaluing the dollar and creating a inflationary market we haven't seen for close to 50 years. This is going to do the exact same thing. That's the only thing that could happen from this. Now, this is a move of desperation. I'll be honest with you, I voted for Trump. I just thought the system is so broken that him breaking it anymore is better than just going on with the status quo, because our spending habits and our policies, frankly, are just unsustainable. And that's where that whole thing came from. But Trump's policy right now, listen, I'm rooting for the guy. I always root for my country. But right now, this $2,000 giveaway is just a bad idea, and it's born out of desperation. The second thing that we're going to talk about, which is really big right now, is offering a 50-year mortgage. Equally as stupid. Why do I say that? Well, we have a precedence for this that's taken place in different areas of the world, and a longer-term mortgage has never worked out, and we will be no different. When you take that with the inflation where we have it right now and look at the rest of the overall economy, you can see why this is a problem. The only thing, and here's what you have to understand. When people are spending more at their housing expense, which is by far their largest expense, what happens with the rest of the economy? Well, I can tell you what happens. We don't travel as much. We don't go out. We don't eat out. We don't spend money. Look at Vegas. They're just getting tore apart right now. You look at Indian casinos. You look at Reno, or Atlantic City has always been in the doldrums. But people aren't spending money as they have in the past, so that has a ripple effect or a compounding effect on the larger economy as a whole. When the housing industry is screwed up and we don't address it, it is going to screw everything else up. So now what we're doing is we're saying, hold on a second here. We're going to bring the cost of housing down by offering a 50-year mortgage. That's putting a Band-Aid on a broken leg, a compound fracture. We're going to kickstart the economy by giving everybody $2,000. Same analogy works here. And again, I want to show you the reasons why. And the fact is that we have great solutions if we were to just have the government quit intervening and trying to participate in a solution for a problem which they created in the first place, which really complicates things. So let's jump into what we're talking about right now. Okay. Again, feel free to reach out. There's my phone number if you have any questions or want to talk about being part of our team. Okay, so Trump said that he's going to issue $2,000 tariff dividend to all except high-earning people. The president says the country is now wealthy because of his tariff policies. Again, this is not even a matter of what you think about this whole thing, if you agree with it or disagree with it. The fact is that this is in the works. Now, we've done this before, and what took place? It created a wild inflationary environment. Hold on, I didn't. And I always felt that this was a great quote. I'm going to read it to you. Sorry about that. Let me just get this thing centered. And here's how the great giveaway works out. And by the way, this was written in the 1700s. A democracy cannot exist as a permanent form of government. Okay, our democracy cannot exist as a permanent form of government. It can only exist until the voters discover that they can vote themselves largesse from the public treasury. So what they're essentially saying here, and I understand that we're not a true democracy, so just don't jump on me, all you Mark Levine fans. I get it. But we certainly have the ability to vote in, decisions for ourselves. And when we vote ourselves over our country, we can go ahead and create problems. What they're saying here is like, our form of government is doomed because we'll eventually figure out that we can go ahead and vote to give ourselves money for free. And these are effectively what we've seen as far as policies go on a federal level for quite some time. I remember joking around probably 20 years ago. I said, one day we're going to have a candidate that says, vote for me and I'll just give you money. Lo and behold, we're there. From which party? Well, it turns out both parties. So before you get on your high horse about whatever party you are, trust me, they're both doing this. Handing out money for nothing has a long-term effect on inflation, which is difficult. Because you're diluting the dollar, you're just generating more, and you're just throwing them out there. From that moment on, the majority always votes for the candidates promising the most benefits from the public treasury, with the result that a democracy always collapses over loose fiscal policies. Sound familiar? Always followed by a dictatorship. Oh, I know you guys love this one. The average age of the world's greatest civilizations has been about 200 years. These nations have progressed through this sequence, from bondage to spiritual faith, from spiritual faith to great courage, from great courage to liberty, from liberty to abundance, from abundance to, selfishness. Yeah. From selfishness to apathy, and from apathy to dependence, from dependence back into bondage. So when I see these massive giveaways like we did years ago during the COVID crisis, I thought, oh my God, this is a terrible idea. And now it looks like we're doing it again. We're doing it again out of desperation. I'm sorry, but that is the only rationalization for this. Somebody is putting politics above policy, because this will have this will create difficulties for us in the long run. I always compared this kind of like to a hangover. I said, listen, you can wake up the next morning and have another drink, and like you can stave off that hangover for a day, for 2 days, for 3 days by getting up and having the old hair of the dog. But eventually you're going to have to pay the piper. You're going to have to stop drinking, knuckle up, deal with your hangover, and get your ass back and, on the right track. Well, giving out money is just as ridiculous as drinking yourself into a coma. Trust me, I know. But eventually you have to stop. What this feels like right now, by offering $2,000 per head, particularly at this time, right after the Republicans kind of got their asses handed to them with those elections that we just had, it feels like desperation, like you're trying to curry favor through paying out money. Furthermore, and this is just bad policy, the 30-year mortgage, the Trump White House is working on a 50-year option to break the housing market gridlock. I've heard this before. We've seen this over in the European countries, specifically the Scandinavian countries, and we've also seen this over with the Asian countries. The one that really stands out is over in Japan, because ask yourself this: why would you offer a 50-year mortgage? Well, that's because sellers aren't bringing their prices down. That's because we have too many permits and too much crap that goes into buying a house to make them too expensive. I get all that. That's because we have tariffs, and we have shingles and windows and panels and sheetrock and tiles and framing wood and all that stuff that's going to come down from Canada and other countries, and it's more expensive as a result of the tariffs. And by the way, might I add, inflation. That's true as well. So how do we cure our affordability issue? I know, let's take the 30-year loan and let's move it to a 50-year loan. Why not then just move it to a 100-year loan? Because all you're trying to do is you're trying to make these payments cheaper for folks across the board. If you amortize over 50, it's going to be cheaper than amortizing over 30. Is this a good idea or is this a bad idea? Well, as I told you a moment ago, we've already seen that this has failed. What we found is just essentially when people had a 50-year mortgage, or excuse me, a 100-year mortgage in Japan, which they call a generational mortgage. It's something that you hand down to your kids and even your grandkids. You are putting your kids and your grandkids in debt as well on a 100-year mortgage. Do the math on it. They said what they found out is people just took that lower payment with the longer amortized loan of 100 years, and then they just bid the house up as if it was a 30-year loan. But the difference is it's the same payment, but on a 100-year loan, you could afford 2.5 times as much house as you can on a 30-year loan. You're amortizing it longer. Your taxes are going to be higher. But the truth is it didn't bring affordability back because we're dealing with an issue of shortage and or surplus. In our case, we have a shortage of housing, so people who can afford, and only those at the top of the socioeconomic rungs are the ones who can afford to buy houses in most major metropolitan areas, leaving those who are middle class and lower middle class who would otherwise be responsible owners on the outside looking in. This fixes absolutely nothing. What they found in Japan was that this worked as a great multi-generational tax loophole for the rich. So after further review, did it help? Well, only the rich. Sound familiar? And here's the main reason why. Inflation, guys. Now, we hear that inflation's at 2.4%. Well, what do you do more than car payments, car repair, electricity for your house, your electricity, utilities, and coffee? None of these things, by the way, go into, these, which are the most expensive items that you're going to be paying for on a regular basis, are ones that are mandatory that you pay for them, less the coffee, though some would disagree with that. But these numbers are not nowhere near the 2.5 to 3% inflation numbers that we've heard that the Federal Reserve is touting as a reason for lowering the Fed prime, the benchmark rate, right? So, because inflation is out of control, people aren't spending money at restaurants, on other goods, both durable and non-durable goods. They're not doing any of that because of housing, primarily, because of their payment on housing, because of their electricity on housing, which has gotten a lot higher, because of their insurance on housing, which has gone through the damn roof. It leaves less money for everybody else because housing is always going to come first, right? So to fix the problem, we're going to put a couple $1,000 in your profit or your pocket, and we're going to offer you a 50-year mortgage. But I want you to look at this. Finland and Denmark, the Nordic countries with the least negative rates, experienced the least housing price growth. Wages did not keep up with housing prices, except in Denmark, further illustrating that negative interest rate policies in general, which, by the way, when we were at or near zero, they were below zero, which intends to go all out for growth, does not properly stimulate the economy and does not promote sustainable growth across all sectors. So what do? Oh my God, our economy's not growing. Inflation is still shitty. Houses are getting more expensive. I know, we're going to offer a 100-year rate. Did it work for the Nordic countries? Well, the Nordic case clearly illustrates that central banks should only maintain price stability, which upholds currency integrity. Currency integrity. Do you think giving you money for not doing a damn thing is doing anything to promote currency integrity in this country? It absolutely effed us the last time around during COVID, and we've seen problems since with our economy since handing out all that free COVID money. The rates, when correctly managed, act as a regulator, okay, ensuring the economy remains diversified. No one sector can take all the growth. The negative, real and deposits, interest rate experiments are failing right now. Get it? They're failing. We have the tried and true, let the market determine its own course. Surging housing costs are aggravated inequally and depriving other sectors in the economy. For example, retail sales since 2007 in Norway grew only 8% despite a brisk population increase of 11% over the same period and expanding consumer credit up 13%. Doesn't spell a pretty picture, does it? Finally on this one, despite the figures and bubble narrative, the Nordic central banks appear to have little appetite to raise rates. No. See, we can't raise rates. Does that sound familiar? We just heard Powell come out and said, I don't know about this inflation thing right now. We're going to give you a quarter, but just back off. He's pulling a Volcker light. Remember, Volcker raised rates by like 7% over the course of a month. Well, we don't have that same appetite. We've already tried to buy down rates to 2.5%, 3%. How did that work? I'll show you. It didn't. It effed everything up. They have little appetite to raise rates, favoring growth and full employment. Nevertheless, they will have to rein in inflation at some point, raising rates. To mitigate a potential crash, we can expect to see the introduction and more widespread availability of long-term rates, 40-year rates, or 40-year terms. We've seen those. 50, we're talking those, and even 100 years. Sweden and Japan already have 100-year intergenerational mortgages. And this is the direction we're looking at right now. Okay. Home prices finally started coming down. 50-year mortgages. Okay, so let's say, is our home prices actually going to come down? With a 50-year rate, price is going to come down? Absolutely not. It's going to bring more looky-loos out of the woodwork, and the cheapest homes are going to go up in terms of value significantly. I want you to take a wild guess when Japan started offering the 100-year rate. What we're looking at on this graph over on the left-hand side is home values in Japan. Home values in Japan. When do you think they started offering a 100-year loan? And that's right, it's over on the left-hand side. Houses back in the late 80s and early 90s were more expensive than they are even today, and that's taking inflation into consideration. Yes, that large bump on the left-hand side for all different or for nationwide, the greater Tokyo area and the Kinki region, they all went up significantly when we started offering 100-year rates. What does this tell us? That's very simple. It says when you offer a 100-year rate, people are going to look at their payment as their only determining factor on buying a house, not how much the sales price is, not what their rate is, but what can they afford. And if they can afford more house because you have a 100-year mortgage, that's precisely what they're going to do. And you will see a bidding war, and you'll see property values skyrocket, and we will find ourselves in the exact same dilemma because what we have is a shortage of housing. We don't have enough houses for all of those who want to live in them. You're like, well, hold on a second. We have more inventory now than we've ever had. We certainly do, because people aren't coming off their prices. New home builders are starting to. And we need to let that thing play itself out. Listen, I'm not selling mortgages. I'm selling dreams. 50 years, baby. $500,000 more in interest, $600 less a month. Everybody wins. Does everybody really win? No. Property prices in Japan. Can you guess, once again, when Japan started offering 100-year mortgages? And the interesting part is when you look at the peak on your left-hand side, that blue graph, after the 100-year mortgage was introduced, we saw a massive skyrocket in pricing. And then what happened? Everything fell apart afterwards. Affordability became the problem. And by the way, why there was a problem in Japan is because Japan has kept their rate at or below zero, as many of the Scandinavian countries did. And so what they started to do is offer a 100-year rate so they can lower the overall payment. But then they started raising their national prime rate. And their prime rate is, in fact, directly related to their mortgage, as most, or if not all, Japanese loans are adjustable rate mortgages tied in with the government and have been offered at low rates of 1% to 2%. What they did is they offered a 100-year loan, and then they decided to raise their mortgage lending rate. And we saw property values drop again. So was a 100-year mortgage a solution? No, quite frankly, it was the problem. Case in point, a $500,000 house at a 3% interest rate had a payment of $2,108. That same $500,000 house with a 7% interest rate, you're paying $900 per month more. That's a massive, massive difference. Yet we cannot keep rates at 2% and 3%. We have a market in 2025 of homeowners who bought their houses or refinance their houses with us 2.5% and 3% rates, and they think it's still 2021, and it's not. To buy that same house today, they'd have to pay $900 more, and most people who bought in 2021 would not be buying today, as is the case of those who were buying who could potentially buy the houses that they are now trying to sell a mere 4 years later. And if you look at all the interest paid on a 50-year mortgage versus a 30-year mortgage, check out the difference. We're going from $257,000 in interest all the way up to $1,005,000. So is this a good deal, or is this a raw deal? Make your argument down below. I want to know what you guys think about this, because I think this one is a massive problem. Again, going back to inflation, we need to fix the house. Oh, and by the way, that 50-year loan, just like giving you $2,000, is an act of desperation trying to kickstart the economy, and they're doing it in a means that is going to have the exact opposite effect. It will torpedo the economy. It absolutely will. And if you don't think inflation is a bigger issue, you know, the government's downplaying it, particularly those in the administration right now are trying to downplay it, just like the last administration did, just like the one before that. But the truth is that inflation is a massive issue. All you have to do is look at our revolving consumer credit debt right now. Oh, baby, this is bad, bad, bad. Back in 1980, remember Don Johnson's 1980s, the Miami Vice 1980s? New wave music and tons of cocaine. Remember all that craziness? Look at all the debt that we were carrying back then in revolving debt. It was nothing. But since then, we have become a nation of borrowing. We're doing it on a national level. We're doing it on a state level. You can come on in. And we're doing it on an individual level. But this is also the byproduct of inflation. How do we get inflation under control? First of all, we don't keep lowering our prime rate. We can't do that. We don't want to have mortgage rates in the threes because all we're doing is exacerbating an already difficult situation. So what do? I know. Let's give money away for nothing, and let's create 50-year mortgages. And if you're doing a 50-year mortgage, a 100-year mortgage is right around the corner. Not a good idea. How it works, multi-generational debt. The loan term was so long that it was expected to be paid off by multi-generations of a family. Heirs would inherit the property along with the remaining mortgage debt. Affordability. By stretching the repayment period, the monthly payments, they went down, which made it possible for individuals to afford homes they otherwise could not based on their own income. Ta-da! Bubble economy. The 100-year mortgages were offered during a period of spiraling land prices and loose credit. Sound familiar? Which encouraged speculation and fueled the real estate bubble. What are the consequences of these type of actions right now? If we were to go and amortize over a longer period of time, nearly doubling where we are currently at. Market collapse. That doesn't sound good. The loosening of lending standard combined with the speculative nature of the market hid risky practices and contributed to the eventual bursting of the bubble in the early 1990s. This, by the way, is Japan. This is not us. So I told you we have precedents for offering longer-term mortgages as not being the solution. We already know it doesn't work. It didn't work in the Scandinavian countries, and here's what we found in Japan. In the 80s, when Tokyo was the most expensive real estate in the world, they started offering 100-year mortgages, and what happened? The bubble popped in the 90s, and everything went to shit. Long-term debt burden. The intergenerational nature of these loans created by a situation where families were burdened with the debt that could span a century, and the financial crisis left many with a long and difficult road to recover. Yeah, I want to be burdened for the next 100 years. When the hell is my retirement supposed to come? I see me owing nobody nothing for any reason. Period. Can we make that happen? And then finally, bank vulnerability. As the bubble burst and prices fell, banks were left with many risky loans, which contributed to the financial instability and a credit crunch that prolonged the economy downturn. Prolonged. Remember my analogy. You can get up after a hard charging night of partying and you can have a hair of the dog and drink the next day and get through the day. You can wake up the next day, have more hair of the dog, keep going. You can, what do they say here? Oh, yes, prolong the inevitable crash. But by taking these policies as just like somebody who's trying to prolong their little partying spiral and mitigate the crash that's going to come, in our cases with this presentation, our economy, particularly the housing market. Does this make sense? Guys, there's going to be a lot more on this. This is a horrible, horrible idea. And really, we need to be pushing against this. Will not bring any relief at the pump for you or for your clients. It will prolong what we're already in, which is a long and already prolonged economic downturn. Creating intergenerational loans is not going to help any particular family. You might find tax loopholes for the rich, but that's about the extent of it. And this will, most importantly, absolutely not bring affordability back to the market. I can promise you that one. And again, we've already seen it. And finally, what I want to talk with you about, and this is going to be really quick. I don't know if you're aware of this, but we're revamping how appraisals are done in this country. Residential appraisals. They're going to be completely revamped. They're going to be looking at these things a little bit more closely. I got my good friend, Michael Shad, who's the president of the Louisville Mortgage Bankers Association, and a dear friend of mine who works with me on my team, CB Loans, over at the Loan Factory, to tell you what you can expect with these changes. Mike, take it away. Okay, Grant, put mics in there and then come out with me. Well, that's all we got for the day. I hope this was helpful. Again, there's going to be more on these topics because they'll have a chilling effect on our economy. They'll have a chilling effect on housing, and they seem to be picking up steam. Two words that I've been very accustomed to using over the past 20 years of doing a mortgage-based video blog: unintended consequences. This will come with unintended consequences, but are they really unintended if it's so easy for everybody else to see? All I know is bust your ass today and things will get better for you.